Hello, everyone. Welcome. I welcome you all to this session on Ask Me Anything session on algorithmic trading. So I hope I'm audible. If anyone from the audience can confirm on the chat or on questions, that would be an amazing thing. So yeah, great. Thank you so much for the confirmation. Perfect. So, so once again, I welcome you all to this session on algorithmic trading, in which we have pitched it to be a Ask Me Anything session. And this is Nitesh Khandelwal this side. I am one of the co-founders of QuantInsti, and I have just a brief background about me. I'm basically an engineering graduate who did his management degree from decent colleges. After that, I have worked in some bank and prop trading desks before starting off iRage, which is now today one of the India's biggest algo trading firms. And during that time, what we have also done is that I've consulted a number of big institutions, helped them set up their own algo desks, and not just in this region, but desks across the globe, especially during my time in Singapore for a few years. So with that background, we thought that now that today, when I'm leading QuantInsti, which is out there to become one of the leading firms in the algorithmic trading domain. So basically, for everything algo, which is the motto that we go ahead with. So we thought that it's probably the right time to actually share our views and our so basically whatever experience that we have gained over the years with all of you audience. And that's why we thought that, okay, why not start with this AMA session, Ask Me Anything session. And the idea is simple. Idea was that to gather the questions from you, put out the very popular questions, which are like most the ones with the highest frequency. You can say HFQ, high frequency questions here, right? So that was the idea, but that's not the only thing. What we are also doing is that we have all your questions being tracked here right now in live. So whatever questions you're posting here, we will try to cover them as well. So that we will be doing, but we do have a pre-prepared list of questions that will be going through. So these are the questions which were the most popular ones, as I said. So that's there. So the way we are going to do this is that the way we will be doing it is that we will pick some questions from these slides, and then we will be following it up with some of the questions that we are getting on the screen right now over here. And we'll try to create keep a decent mix of both, so that those who have asked the questions earlier as well as those who are asking questions right now, that is pretty much balanced. So that's the plan for this session. It's about, we have scheduled it for about an hour or so, but you do not need to worry if your questions are not addressed. We did get almost close to 1,000 questions. It's almost impossible to cover all of them in whatever time duration we stretch this session for. But what we do have is that we have a team of experts who will be addressing your queries individually later on. For the queries that are not getting answered right now, they will definitely be getting answered in your one-on-one sessions later on with our team. So that's there. Now, so now we will go ahead with the session here, and here we go. So there were question categories. There were almost 8 categories that we had put out there. So these were like platforms and brokers, trading strategies, market data, job opportunities, as well as the ones like how to set up your own algo trading desk, what are the regulations and business environment, what is the future of algo trading, and the learning and education, right? So how, if you want to build your skill sets, how do you go about that? So these were all the different question categories. We have tried to balance it out in this presentation, but as I said, we'll be taking questions as we progress in this session. So yeah, so let's move ahead. Before we go ahead, this is one thing that one background information, or rather one concept we wanted to share with you before we take on the questions. That was the strategy definition, or rather you can say the kind of algorithmic trading strategies that are there. You will see a lot of things like low frequency trading, medium frequency trading, high frequency trading. And if you Google for the definition, or look out in any of the textbooks or popular books, you will see that, okay, low frequency is something which is where you do very few trades in a month or in a week. Medium frequency would be something like intraday strategy, in which you are doing few trades every day. And high frequency trading would be something in which you are doing a lot of trades in every second, or you will be closing out on the trades like many times in a second. Which is, I'm not saying that's not correct, it's correct, but that does not help you much, right? So so it doesn't matter what the frequency of the trading is, because there can be a strategy in which you're sending out huge number of orders, but they're not getting traded. So does that mean it's not a high frequency trading strategy? You're sending out, say, 100 orders in a second. So, but say every the trades are happening after not that much, momentarily they are happening, or like in a few minutes one trade is happening. That does not make it medium frequency trading, does it? So that's why we came up with another definition, which probably should suit more for the benefit of all the audience, as well as for a better understanding. And that is that if your trading strategy can accommodate a latency of, say, half a second or a second without too much deterioration in the performance, we call it low frequency trading. If your strategy can not accommodate that much, but can still accommodate few 10 milliseconds, then we are talking about medium frequency trading strategies. And if your strategy cannot afford to have a disadvantage of even 1 microsecond, now we are entering into the realm of high frequency trading, right? So what we have done here is that we have mixed the concept of all these different trading strategy paradigms with the latency. What is latency? Latency is how much time you're losing out when you're sending out an order, right? So time it is taking to reach out to the destination, trading destination, to the exchange, and how much time it is taking to process different things like market data, order routing, all those things, right? So this helps you in actually thinking about that, okay, this is the kind of strategy. If my strategy can accommodate a huge amount of time, which is like few milliseconds or few tens of milliseconds, then I do not need a high frequency trading infrastructure, right? So that helps in estimating what would be the infrastructure that you will need when you are going ahead for when you're setting up your own desk, or when you're picking up a strategy. Should you be picking up a momentum strategy or a market making strategy? All those questions becomes much more easily answerable if you know what is the latency that your strategy can accommodate. Okay, so having said that, let's take up the questions. So first and very popular question has been, where can I get the market data, historical or real time, as well as other economic data from the different for different markets? So we came up with a list for that. So this is not a comprehensive list. This is just the top of the things that are easily available, but there are lots and lots of other data vendors who are available. So these are the ones which are free, which offer some kind of free data. So which would be your Yahoo Finance, Google Finance, QuantIX, Quandl, AlphaVantage, FXCM. So for different markets, for different asset classes, you try to keep it a mix of that. And one interesting thing to note here is that in a lot of these vendors, there are, especially on the algo trading side now, there are two concepts. One is about you having access to the downloadable data, which is you are able to download the data, and other one is there where you can use that data on a platform. So you're not able to download it, but you can use that data. So it's a mix of all these things, and in some of these cases you can manually download. In some of these cases you can fetch the data through the API or write a small script or a program and fetch the data. And then there is a whole list of paid vendors who offer you like different kind of data: Kinetic, Quant House, Global Data Feed, Trading Economics. This one also includes your different economic data, Thomson Reuters, which also offers you like machine readable news and all those kind of data, Active Financial. So all these, so these are more like the paid ones in which you can get data, different kind of data, like tick data as well as second data as well as minute data or overnight data, depending on which one you are going ahead with. Okay. Next question is it true that HFT or algo traders generally beat manual day traders? Therefore, if conventional trading reduces under a certain threshold, HFT or algos lose their interest on that market? If it is, what is that threshold? So it would not be absolutely true to say that HFTs generally beat manual day traders. It would depend on what kind of day traders we are talking about here. If we are talking about the day traders who are doing, taking benefit of the arbitrage opportunities or market inefficiencies, then yes, machines can do all those things much faster than. So, like if you are a manual trader, if you're really good, you can probably send one order in a second. If you're like extremely good, and that's what you have been doing all your life, that is sending out the orders, and maybe 2 orders in a second. If you're Superman, maybe 3 or 4 orders in a second, but not beyond that. A machine can send you, like, it's generally only limited by what exchange settles the throttle rate at. So a machine can send like thousands of orders in a second. So there is no match, obviously, over that. But if you're talking about the traders who are who are analyzing the data and who are executing their orders in a manual way, but are much more researched and are doing a lot of homework on their side, then no, then it doesn't matter, right? So that's the difference. And is there any certain threshold HFT algos lose their interest on that market? So on the contrary, what we have seen is that more the high frequency trading volume participation, more are the number of players who are there. So say, for example, if we take the markets in the developed, the exchanges in the developed market, say NYSE or other exchanges in US, you will see that in some of the exchanges, almost 80 to 85% of the volume is happening through algos, right? So that means that, and you have most of the HFT firms focused on those markets. So if there was a threshold, then all those high frequency trading firms would have gone away, but that's not the case. Same is the case in the developing markets also. So like in India, you have almost close to 45 to 50% of the overall exchange volumes in the leading exchanges, especially on the derivatives side, which is the segment in which most of the volume happens in India. So over there also, if you see, it's almost 50%, 45 to 50% of the volume is through algos. So the firms are not reducing. It's not happening that the use of algorithms is reducing or anything like that. That's not happening. So threshold probably maybe on the lower side. Even on the lower side, I'm not sure, but definitely not on the higher side. That if there is too much of algorithms out there, in that case, the HFTs will run away. No, that's not true. Competition will heat up, yes. So some HFTs will go out of the business, some will remain, but that's about it. So it will not be like there's too many of them, so we'll shut shop. It's just a competitive, just a simple competition which will be happening. So that's there. Now, another, I think this was more like the extension of the similar question, is what if market is excessively algo traded? Will it be counterproductive? So counterproductive, would it be counterproductive? Not really. So when we say algo is essentially what we are saying is that we have automated the execution. Algo does not always mean high frequency trading, right? So you can you can say if you're trading using, if you're a retail customer and you're trading using an API of interactive brokers or any of the brokers who offer the API access, you're not really trading on a high frequency basis, so you're not a HFT, but you are definitely algo, right? So you are trading using the algos. So it just brings more efficiency, which you can say. So if it is excessively algo traded, then definitely if you are trying to trade the inefficiencies in the market, then it would be a challenge. But because spotting those inefficiencies will be really, really difficult. But otherwise, no. So otherwise, it's I would not say it would be counterproductive. Another thing is that even for the inefficiencies, if you are targeting that, in that case, it becomes a game of technology and infrastructure. So technology, as the technology keeps on advancing, infrastructure also keeps on advancing in terms of the kind of network access you can have, in terms of kind of systems that you'll be having, hardware infrastructure, network infrastructure, all of that. So that becomes that keeps on becoming more and more expensive, even though the cost of technology keeps on coming down. But the kind of, with the competition heating up, you always need better and better systems. So HFTs, generally, if you are focused on the on eating on the market inefficiencies, then obviously more the HFT presence in a market, more difficult it would be to spot an inefficiency, because the moment it is there, it's gone. Someone will take it away. Okay. Now, another question is, can I quantify technical indicators? Yes, you can, and it's very simple for the, especially for the technical indicators, because they are ultimately a set of mathematical formulas. Whether they're quantitative or not, that can be seen upon. That some of them would be quantitative in nature, some of them would be more of you can say like more of art work, right? So technical analysis is an art, not really a science. Quant trading is more of a science, less of a art. So that difference would be there. But can you automate that or quantify that? Yes, you can definitely do that. How about patterns and waves? That also you can do. Patterns with relatively much more ease. So if you can, so here's the thing. If you can think of something, a machine can do it. Why is that? Because machine works on logic, you also work on logic. Now, your brain also works on logic. Now, the thing is that some of the algorithms can be much more complex when you're trying to code a logic. Some of it can be really complex, some of it would not be that complex. So say if it is about drawing a trend line, that it's fairly simple, fairly straightforward. You are looking for two points, and y equal to mx plus c is what your formula for a line is, right? And if you know the slope, if you know the intercept, you can create a line. Or if you know 2 points, you can calculate the slope and the intercept, and you can create a line, right? So that part is not that difficult. You can identify the local maximas and local minimas and draw a trend line. But if you're looking at something which is slightly more subjective, which is in which there is a lot of room for subjectivity, in that case, that can be much more difficult, right? So that's there. Similarly, on the wave side, say if you're trying to code a Elliott wave, if you have defined the wave rules very explicitly, then it's not that difficult. If you have not defined the rules for the wave, so if you have kept a lot of room for subjectivity, in that case, it will become really difficult. And in fact, there are some tools which are available for APIs which are there for the coding up or creating algos for these patterns and waves. And in fact, we have on our side also been working on such things, in which probably you would see more coming from our side in future. So that's there. Now, I think we will take up a few questions that we have been receiving over here. So I will probably filter out few of the questions which I know that we have covered over here. So we will address them later. If I miss out, then please do let us know. We'll definitely address them later on. But yeah, let me go through the questions that we have received so far in the past few minutes. We are an FPI. How to handle multiple strategies in a brokerage account when there are no sub account with a broker? So if you're FPI, like I would need to know a bit more, whether it's a category 2 or category 3, but whichever category it is, you can run multiple strategies on a single CTCL ID. I'm assuming you're talking about, since you have mentioned FPI, you're talking about Indian markets. So you can have multiple, you can have same strategy running on multiple strategies running on same CTCL ID. So that is possible. So if your platform supports that, then that can be done. You do not need a sub account as such for that. Otherwise, you can also go for multiple accounts. You can have multiple accounts mapped on a single machine. That's also possible. So both the things are technologically possible. All right. So, and there are vendors who should be able to help you. That depends on what kind of trading platform you're using, but that's there. Okay. What are the prerequisites needed for algorithmic trading? We'll cover that in a bit. How to step by step to algo trading from 0 to 90? That's a good question. So so probably I think if you're starting from 0, the key things to note here is that algo trading typically would have about 3 major pillars, which the whole algo and quant trading stands on. One is statistics and econometrics, another is financial computing, third one is quant trading, right? So quant trading, or rather trading strategies, if I can say that. So where your knowledge is, if it is 0 in all the 3 domains, the first thing would be to learn about it. You can learn in many ways. There are a lot of resources which are out there available, even on the QuantInsti website itself. There are a lot of resources which are there freely available. So you start with that and then progress towards the automating. If you're new to trading strategies, then you first learn about them. If you're already a trader but you're looking at automation, then you use some broker API and start automating your strategy. If you're already doing that, in that case, you move ahead and you can actually get a medium frequency trading strategy coded on a broker on a vendor platform. Or if you are a expert programmer yourself, or you have a team of expert programmers, then you can build your own API as well, as use the exchange API and build your own trading platform as well. You can code your strategies on that. And if everything is well set, and if you're a big institution or a big prop house and you want to venture out into the high frequency domain, then you can even do that. So that's typically 0 to 90. I hope I covered that. Which data provider gives true tick data for Indian markets, not second snapshot data? Right. So here is the interesting thing that, as you rightly said in your question here, that most of the vendors or most of the data providers, when they say tick data, they do not really mean tick data. What they mean is snapshot data, which is snapshot of the exchange or of the order book that they send out few times every second, right? Actual tick data is very bulky, so it's quite huge. So just to give you an example, if you are taking 1 day of real tick data for an exchange like say NSE, just the derivative segment, it would be somewhere in the range of 25 to 40 GBs for 1 day, depending on the size of the depending on the how much activity was there during the day. Similarly, if you're doing it more for a bigger exchange, say something like CME, it would go into hundreds of GBs. Actually, much more than hundreds of GBs. It would be a bit higher than few hundred GBs, given the number of instruments that they have, right? So that's so that phase, most of the vendors do not provide that. Some of the vendors, high-end vendors, do provide that. So you can get access to that, but that would be slightly bit more expensive. If you have a decent technology or a decent trading platform on your own side, in that case, you can get the data directly from the exchange as well. In some of the cases, it would be much more economical as well. So say, for example, in India, if you are doing that, if you're taking the tick by tick data from the exchange, and if you're a member with the exchange, then you get it for like almost close to $1,500 per year. So which is not a huge cost. Even for the individual trader, but if you're going ahead and taking it from a distributor, the cost can be significantly higher if it is the real tick by tick data that you're talking about. For the snapshot data or the second data, that would not be the case. It would be much cheaper. I am a vol arb trader. Do I need to learn algo as ready-made softwares are available? See, it all depends on what works for you. If the ready-made softwares are already working for you and you're happy with the performance, then probably you just need to keep on evolving, and you need to keep on experimenting, because the same thing would not be working for all the time. So you need to keep on upgrading yourself. But if it is working, then you do not. If it is working fine with you, then no need to learn. But if it is not, as in learning, I think some bit of learning always helps. But yeah, focused learning may be not required if it is already working out for you. But if you want to expand, or if you want to enhance it, then obviously it might help you. Would Algo automated trading help in conquering the emotional shortcoming in trading? Definitely. I think these are so there are some of the key benefits of automating your strategies, and controlling the emotions is one of the big ones. So controlling the emotion, as well as giving you the scalability, as well as giving you the bandwidth that you can use to work on the strategies while execution is taken care of by the machine. So all these are the key benefits that you get by automating at any scale, right? So emotional shortcomings, yes, because unless if you are interfering with your code all the time, then nothing can help you. But assuming that you're not doing that, then yes, you can do that. The link to the webinar has not mailed. Okay, not sure about that. How can a finance guy make career in this domain? So as I said, it's a set of three things that we have here. One is one is statistics and econometrics, one is programming, which is financial computing, and the quant trading strategy. So if you have if you have a finance background, if you're already good on the first and third, then you need to pick on the financial computing side. So you need to learn that, right? So if anyone is telling you that, okay, you are already a trader and you can automate your strategies now without learning any programming, he might not be lying. You can do that. There are some tools which are available, drag and drop tools, in which you can create the logic without actually coding, but they are very limited, and they will be limiting your ability to what do you say ability to change or modify your strategy, or to implement your ideas, right? So that phase, it becomes difficult. So if you know programming, that really helps. And especially even if you're not automating, even to do the data analysis, it will help you a lot, because the things that you can do with 2 lines in a Python code, you will need a lot more if you're doing it on a non-programmable tool. Okay, is HFT for retail trader? Is Algo for retail trader? Probably yes, if you get the right skill. But HFT for retail trader, definitely no, because HFT is more of a infra technology game. So don't get misled by anyone saying that you are a retail trader, now you go do HFT. Either the person does not mean what HFT exactly means, or it does not mean what retail trader means. So in either of the cases, please no. So you will need to spend a reasonable amount of capital before you can actually go ahead and start trading HFT strategies. So yeah, but that does not mean that you cannot do Algo. Algo you can, but if you're planning to do cash future arbitrage, or a calendar spread, or some basic put call parity arbitrage using a retail platform, then probably you'll not be seeing much success based on that. Okay. So yeah, so I've tried to cover some of there are a lot many over here, but yeah, we'll come back here. But let's switch back to the predefined questions here. So can I quantify technical? Yeah, so I think we have taken this question already. Now, I'm a trader, but I don't know programming. How should I get started with algorithmic trading? So the answer lies in the question. You don't know programming, you pick up programming, right? So the good thing here is that for most of the tasks that you would be required to do while doing algorithmic trading, you don't need hardcore programming expertise in the languages like C++ or C. If you have that, that's brilliant. But even if you don't have that, even if you have a decent understanding of languages like Python, that also works, right? So because most of the analysis you would be able to do that, and most of the firms across the globe these days Python in the last 5 years, 5 years has come up like anything. So yeah, so you can if you know a bit of Python but not C++ or Java, that also works. But you need to know a bit, otherwise it would be, you will be handicapped basically. So that's not a good thing. And the good part is that we have seen so many people who do not have any programming background but have been able to pick up languages like Python with much more ease as compared to the difficulty that they used to face with C++ or Java. So that's doable, but obviously it will need a lot of effort and time and commitment on your side. So if you have never done programming in your life, so that's there, but it's doable. Is algo trading legal in India? Definitely yes. So April 3, 2008 is when SEBI allowed algorithmic trading in India. So since then it has certainly been legal. Skills required to land a job as an algorithmic trader. So the kind of skills that you will need typically would be your, as I said, the three things. Again, I think that's a repeat, but still, statistics and econometrics, financial computing, and quant trading strategies. Now, if you're looking to become a trader yourself, then in that case, yes, you will need all these things. If you're looking to become algo developer, then you would probably need more expertise on the programming side. If you are looking to become more of a strategist, in that case, you would need more deeper understanding of the trading strategies, derivatives, and all the different asset classes. In case if you are focusing more on the quant analyst role kind of thing, in that case, you need to have a stronger expertise in statistics and econometrics. So all these three, everyone would need to know all these three things, but how much expertise you will need to know in each one of them, that varies depending on what kind of profile you're targeting. What are the career opportunities in algo trading? How can EPAT help? So, right, so there are, as I said, the like three I just listed, quant analyst, quant trader, as well as algo developer. Then there are a whole list of profiles which are out there, which varies from the back office roles to front office roles to trading roles to analyst roles, development roles, as well as your risk management, network management, all those things which are there. So our advice generally is that if you're getting into a business as a job or as your own business, in either of the two cases, so it's better to have a good idea about all these three things. And this is algo trading is definitely one of the more rewarding streams as compared to say conventional trading or other trading other career domains. So that phase, if you are, and it's much more intellectually stimulating as well, right? So you want to do something which is much more where you can do a lot, you can experiment a lot. So these kind of opportunities give you those kind of openings as well. So that really helps. EPAT, so that is QuantInsti, does have a dedicated placement cell which helps the people, and it's not just actually placement cell, it's a full-fledged career cell. When we say career, so the difference between the career cell and a placement cell is that the placement cell only focuses on getting you placed. A career cell helps you in getting placed, as well as even if you're not looking for a switch, but you are trying to boost up your skills or seeking guidance to move up the ladder in your own same organization, in the same role or in a different role within the same organization, or trying to start up a new business, or you need broker connect, a broker vendor, or a vendor connect, or funds, or investments, or anything. So the career cell helps you with that, right? So in finding the right connects as well as acquiring the right knowledge and information. So that's where QuantInsti's career cell becomes much more instrumental for you. So they always keeps on bringing you different opportunities which are available out there in the markets in different geographies. So that's there. What prospects can someone with 10 to 20 years of domain expertise and no trading experience expect as an algo trader? This is interesting, and I took the liberty to add one of the QuantInsti blog links here. So which is this is basically a blog about one of the QuantInsti alumni who was in his 40s, and he was okay. I'll send it over the chat as well to all of you. So 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 the way he was able to he was not from a programming background, he was not from a trading background, but he was able to make a switch, and that too with like 20 plus years of experience. So yes, such opportunities do exist. Obviously it is it wouldn't be unfair to say that he didn't put in a lot of effort. He did, and he spent, as I said, time, effort, and commitment. If these three things are there, then yes, there are a lot of opportunities which are there. So opportunities which will keep on coming, and like with all our participants, we do share, I think, good number of opportunities every week. But yeah, ultimately it's you, right? So we can only guide. You have to go and win the war. So that's there. Another question, can C++ language be used for algo trading? Does Java matter in algo trading? C++, most of the HFT firms, if you are on the high frequency, low latency side, C++ is the preferred language. If you're concerned about every microsecond, so then it does matter because it is faster. In case if you are not concerned about that, in that case you can have any other language. It doesn't matter, but it does not add that much latency that you will be concerned about. So yeah, but C++ language can be used, yes. Can it be the only one that can be used? If you are doing HFT, then most likely yes, but not otherwise. Another thing is that you use these languages. Programming is not just there for coding up your execution algorithms or coding up your algorithms. It's also helpful in doing a lot of research and analysis, right? So that is something which is much more popular with R and Python. So even in the HFT desks, even in the high frequency trading desks, you will see lot of analysts as well as traders using R and Python for their back testing and for evaluating different strategies. When it goes to production, the algorithms are then used coded in C++ for HFT. But otherwise, yes, a lot of usage of R and Python. And for medium frequency and low frequency, you can use any of the languages. Should be fine. Okay. Next question. I trade a system wherein the hit ratio is 45%. Average profit to average loss is 1.75. Trades are 2 to 3 per month, but there are back-to-back losses, at times even seen up to 7 losses in a row. This particular difficulty stops me from increasing my trading quantity even when capital is positive. Can you suggest a solution? So I have only limited information here, but what I suspect, or what I would guess here, is that it's something in which the backtesting parameters or the output parameters that you are optimizing, there can be some room of optimization there. So there are things like, so in the quant trading strategies, you look at the Sortino ratio as well as your different ratios which are there, and the one basic thing which almost every trader looks at is the drawdown. So when you are doing it, there's one concept of again a basic concept, but not that popular, which is the in sample and out of sample trading, and which is that you do not optimize your backtesting on the whole data set that is available to you. You break it down into in sample data and out of sample data. In the in sample data, you do all the optimizations that you want to do, and then you run that strategy on the out of sample data, on which it has not been optimized for, and you check how the performance is, in your case how the drawdown is, right? So if the drawdown is too high, then you need to curb a bit of volatility in your strategy. So which is the risk which is probably too high, in case if it is giving results which are showing back-to-back big losses in the out of sample data. So that's something that might help you, and you can get more confident of scaling up your strategy with your positive capital. How can we understand if a market or trading venue is saturated in terms of HFT or algo trading? For example, as an HFT firm, I am considering to enter into a new market. How important for me the existing HFT ratio in that market is? So as we discussed, I think earlier, HFT ratio just tells you about how much competition you can expect. So if your strategies are plain vanilla arbitrage strategies, then if the higher HFT ratio would suggest that it might not be a good idea to venture into that market. If your strategies are not plain vanilla strategies but are more intelligent, uses different data analysis results, like more on the machine learning or more on the even not necessarily machine learning, but uses more statistical data and makes some decent predictions, in that case it might not matter that much. Okay, but a high HFT ratio definitely means that if you want to venture into the plain vanilla arbitrage kind of strategies, or even to a certain extent market making strategies, you will need to have a very strong technology and infrastructure in place on your end. Okay, so let's see the questions again. I'll switch to the questions on the audience panel here. So what is the exact meaning of total bid quantity and total ask quantity? Who those are about to purchase but nothing bought, yet to sell, and vice versa, where their numbers will be counted? Who those are already purchased but not sold yet, and vice versa, where are those numbers will be counted? So total bid quantity and total ask quantity, they're simply what is there to buy and to sell, the people who are out there. So it does not give you an indication of how much has been traded. It just tells you the market picture that, okay, this many people are out there, or for this much quantity, they are out there to buy on the bid side and sell on the ask side. So that's about it. I trade only by charts using price action with no knowledge of coding. How can I start with algo trading? I think we covered this question just after the break over here. Just before we took the break on the audience chat questions. In India, do you see any decrease in conventional traders volume after HFTs entered into market? Oh, yes, definitely. As I said that, so in India, you used to have had all these big proprietary trading houses, which would employ 500 to 1,000 dealers, right? So these are the guys who will just keep on doing in and out. Basically, jobbers is what was a common term here. And these jobbers would be just reading the screen, not do too much of analysis, but would be taking a position and trying to exit within a few seconds or within a few minutes time, and also try to do a lot of arbitrage, execute a lot of arbitrage strategies. So all those things were very popular, but with algos, obviously these things are very much replaceable, very easily replaceable by the machines. So that's what happened. So those kind of firms had to shrink. But most of them did change their strategy and change the business model also, and moved more on the quant-oriented side. So that was the change that we saw in India. Okay, I am a software professional with data science background. How soon I will be able to make a modest algorithm? So I think that's a pretty strong background from the algo trading point of view, because you have done what is happening in that case is that you already have a good understanding, a strong grasp on statistics. You already have a strong understanding of programming. Now, quant trading is the thing that you need to pick on. So if you have a good understanding of the software and statistics, in that case, it should be relatively easier, but obviously, again, it depends on where you will be starting from on the financial market side. But I can answer how many months or how many years it will take, but yes, you got 2 out of 3, so the priorities on your side, I would guess. Okay. For algo, what usually is the time horizon used to crunch data? 5 years, 10 years? Again, algo does not mean much. Algo just mean that you are automating the strategy. If you're talking about high frequency trading, in that case, it would generally, we don't go to 5 years, 10 years of data. because market microstructure in case of high frequency trading changes much more faster. So say if you are trying to backtest, say for example, you're trying to backtest a simple cash to future arbitrage strategy. Now that strategy, if you're testing it 10 years ago on a data which is like 10 years ago in 2007, algo trading was not even allowed in India, right? So, so that phase, the data, the results that you will be getting would not be of much use. Typically, it's 1 year or 2 year at the max for high frequency trading strategies. For the low frequency, yes, you can go up to 5 to 10 years. So that's there. Is this session recorded? Yes, this session is being recorded, and I do hope that we'll be sharing the recorded link with you. Is it possible to set up a trading platform on ME Broker with the help of your company? So no. So we are more on the education side. We do have the expertise on all those things, but we do not give consulting as such. We definitely give guidance to. So that's the lifelong guidance that is provided to all our participants and alumni. But yeah, we do not do the consulting part as such. Okay, how tedious is it to get legal approval for any automation? How confidential, secure will it be when it goes to automated after approval? Is approval process and infrastructure cost affordable for retail traders? Approval process is not that costly, but infrastructure, if you're going for HFT, yeah, it would be slightly a big burden in case if you're a retail or individual trader. But automation, yes, you can do that, and that would not be a huge cost as such. So generally, I'm assuming this question is coming from an Indian participant. So I'm assuming this is this from the Indian market perspective. India has a peculiar regulation which says that you have to approve each and every strategy before you take it live. So which is slightly different from most of the developed market regulations, in which you have to get the platform approved, but once the platform is approved, you can code any strategy that you want to on that platform. So that's a slight difference in terms of what we have in India, as well as in select other markets, including Thailand and few other. So there you have to get every algo trading strategy approved before you can automate that. So yes. So the thing is that you will be, the broker gets the approval on your behalf. You cannot go to the exchange and take the approval as a retail trader. So the broker gets the approval. So it would depend on the what kind of cost and everything would be dependent more on the broker than anything else. Technically, it's not that costly though. All right, so I will skip a few questions. I think I'm far behind. Okay. Guys, I'm really sorry. I think there are too many questions that have come up in this last 5-10 minutes itself. But I'll try to I'll have to do some random picking here. But yeah, how can a sub-broker benefit from algo trading? Is it possible to automate algo trade with strategies for all my clients? How is stochastic also covered? So sub-broker benefit from algo trading, you can, even if as a sub-broker, you can use your broker to get the approval for your algo trading strategies. So that is possible. For your clients also, the same thing applies. So your broker will have to get the approval. Stochastic also covered. I'm not sure whether you're talking about the statistical stochastic or the technical analysis stochastic here, but in either case, both can be covered in any strategy, yes. Okay. Is fundamental indicators data fed to the program manually? Fundamental indicators, if you're talking about the P ratio and the fundamental, typical fundamental like GDP growth or macroeconomic data, you can feed that manually, or you can feed that using direct software as well. So there are so there are a few companies that do provide you data, machine readable news and machine readable economic data. So you can feed that, you can take that data, and your algorithm can directly read that data as and when it gets published, and you can pre-code your strategy that, okay, in case the data is coming out like this or that or in this range, then do this and that and send out these orders. All those things are possible. They're not that common in the retail space, but there are tools which are coming up now which can be used by retail as well. But more common, these are more common for the big prop desk or the institutions. But as I said, there are more tools which are coming up in which you can actually read the data or scrape the data on the web or on the news directly yourself using those tools. All right. Now, question: what are the advantages and disadvantages of doing HFT for non-India markets from India? Interesting one. So this is this. I think this would fall more on the regulation side than anything else. So if you are as an Indian, you are reasonably certain that you cannot send out money to trade into margin products listed on the foreign exchanges under the LRS scheme. So unless you have RBI approval, I don't think that you can do that. But if you are, if there is any company out there who has outsourced some of its trading to you, if there is some global company, then probably you can. I'm not sure, but I'm sure that you cannot send out money. You can send out money for investing definitely, but you cannot send out money for margin trading on margin. Okay, then few more questions. Let's take that. Who are the I asked the second predefined question. Okay, probably might have skipped. Shall a trading venue has concerns about losing its retail trading volume after HFTs entered into the market? Oh, definitely not. Definitely not. I don't think that has. I don't know any empirical evidence about that, because what happens is that if you have HFTs in the market, see, retail does not do arbitrage, right? Generally, they are not the ones who will be doing arbitrage. Retail does take positions. They'll buy stock. They'll trade some commodities or whatever they are trading. They are not looking. They are generally taking a directional bet most of the times. Now, if there are no HFTs in the market, in that case, the bid-ask spread that they will be paying are relatively much higher. Okay. If the HFTs are there, then the market would be much more efficient, which means that they will be paying far less bid-ask spread. In fact, there was a study by AITE Group, AITE Group, which is one of the leading analysis agencies, especially in the HFT domain. So there was a study by AITE agency a few years back, and in which they had mentioned that an average American retail trader saves almost close to $250 every year. Like average American trader, every one of them saves almost $250 just because of the better bid-ask spread that has happened due to high frequency and algorithmic trading, right? So it's actually on the contrary. If you should ideally see more retail participating, because they would be the markets would be much more liquid. And why does that happen? Why are markets much more liquid in case HFTs are present there? It's simple. HFTs has the technology and the infrastructure that they create so that their risk to make narrower markets is far less. In case something drastic happens, something really bad happens in the economy, or any event that comes up for a particular stock result or management decision, anything, so they can react much faster, right? So they have more confidence, which means that they can afford to make narrower market for like that remaining of the 99.99% of the time. So which would not be the case if you say like add speed bumps or take away that confidence or that comfort for the high frequency traders, right? So that's why you see much more tighter markets when you have HFTs. Otherwise, it's much more you can say much more bid-ask spread that an average retail trader pays is much higher. Okay. All right. So I'll take one more questions from this list before going ahead. Flash Boy's novel paints HFT as unethical. Do you subscribe to that view? Should having system with higher computing power give you the right to front run the little Joe? Interesting thing. So So there is obviously a lot of coverage about high frequency trading, although today's session is more about algo trading than HFT. But anyways, let's cover that point. Um, so if you talk about someone doing something illegal or not conforming to the rules or regulations, then obviously that's incorrect and that should not happen. That is independent of which domain, whether it's financial markets or whether it's e-commerce or whether it's high frequency trading or fund management, all those things. Whatever it be, that's not right. So that should not be allowed. Of course, that goes without that saying that. Uh, but when you say that, okay, having someone having higher computing power, you're the right to front run the little Joe. So as I just said that a little Joe typically saves a lot on the cost, the transaction cost that he ends up paying to the say manual jobbers who are making the markets earlier, or basically to the market. They're saving a lot more because the HFTs are there. If HFTs are there, what they are taking away? They are taking away the arbitrage opportunities because they are making the market efficient. If they are doing that, in that case, who gets hurt? It would be the people who are doing the making use of the arbitrage opportunities. So with that background, I don't think like this is more my personal view. I'm not sure. There are people who obviously can counter that or argue against that. But I don't think that the retail trader gets hurt by anything that HFT does, because that's the advantage that HFT gets over a medium frequency trading firm or a broker or retail is like of the order of few microseconds, a few milliseconds. A retail trader sends his orders using a web-based browser, which means that you have a already inbuilt latency of few hundred milliseconds. So you are not going to get affected. If any HFT is doing anything in which they are getting illegal access, so that's a different thing. But even in that case, retail trader does not get hurt. It's the other HFT firms who are bearing the brunt because they are following the rules and someone is not. In that case, that guy is becoming few microseconds faster, which is a big deal for the other HFT firm, but not for the retail trader, right? So regardless, that it doesn't matter for him. So yeah. So I fail to understand that, but I don't know whatever the reasons are why that debate comes in, with retail trader being put at the center, probably just to I don't know what the real objective is there. But of course, if someone is having illegal access, that's not good for the market in general. So definitely, if someone is putting their server in co-location so that they can quote narrower, because now they're closer to the exchange, so which means they can send out narrow quotes and they can make the market more efficient. I don't see what's unethical in that. If you put me 100 kilometers or 200 kilometers away, or probably in terms of latency, half a second or 1 second away from the exchange, then obviously I will adjust to that, and I'll just make my quotes wider. That's about it. Nothing else will happen, right? So it's a losing thing for the overall market, and especially for the retail trader. So that's there. Okay. All right. So yeah. So let's come back to the questions here. Sorry, I probably skipped almost 100 questions, I think, in between, but I'm very sorry about that. We will definitely come back to you with all these questions listed later on. Okay. So I'm a Brazilian and I'm going to do the training, but I'm still studying English. Is it possible to study with the help of Google Translator? Most of the resources that you will find right now, at least for algorithmic as well as quantitative trading, would be mostly in English. So that's definitely there. So you do not need expertise in the language, but if you can understand and read, then I think most of the fight is won in that case. So that's there. Having said that, we are working on a few modules in which we will be coming up with courses in multilingual formats as well. So be it like Brazil in Spanish or Mandarin or all those different languages. So that would be happening. But yeah, so that's our way of handling that. But that should be happening soon actually. So yeah. If I have a program which shows realistic backtest and forward test result, how should I handle it in future to keep it consistently profitable in market? So consistently profitable for the same strategy, that's going to be a difficult thing. It does not happen that way, that you have one strategy and that you'll keep making money out of that strategy. So when you're trading, you need to look at it as this is probably, I repeat a lot with a lot of so many different participants and the alumni that we keep guiding, and that is that you need to look at it as a business. Trading is a serious business. Trading is not about just buying and selling. That is what ultimately you do, but ultimately it's about business. In business, it's all about what are the margins you're keeping, what are the competitive edges that you are acquiring. So those things are important. If it's just a trading strategy and you think that that will consistently keep on making you money, it might not work that way. So you will have to acquire different competitive edges, and also even if it is just a trading strategy, you will probably need to keep on fine-tuning it, because markets will keep on changing. The market, more especially market microstructure, will keep on changing, right? So given that, it's better to keep on evolving your strategy, keep on doing more, adding more nuances to it, so that so basically every day you have to take a step forward, right? So you cannot stand still and hope to cover the whole journey yourself. In India, which brokers support algo trading and on which platform? Not a lot, but there are a few who maybe not in strict sense algorithmic trading, but then maybe programmatic trading, in which you can make use of some programs. So some semi-algo, some algo. So there are a few which would include the likes of I think Zerodha, Interactive Brokers, Master Trust. All these guys do have, and in fact, I think if I remember it right, even 5paisa, and these guys are also coming up with different platforms. So it's Reliance Securities. So all these guys you can check, but yeah, everyone provides different platforms. Some are providing Python-based platforms. Some are providing you MT4 or AMI broker kind of platforms. So that varies. Some are providing multiple of them. So that's there. How liquid is the job market? Job market for someone who has completed a QuantInsti's executive program, or are jobs in quant trading the reserve of PhDs? If you have a PhD, it definitely helps. So that's definitely true. But not all the firms need just the PhDs. So you need to know your stuff. That's what the key requirement we keep on seeing from different placement partners that we have, and not just in a particular geography, not just in India, but even outside. So not a lot of them are looking out for PhD guys. Obviously, some of the HFT firms keep a focus on only hiring physics or maths PhD guys, but not a huge lot of them. So it's an advantage, but it's not like if you don't have that, then you cannot pick up those skills and enter into the industry. You can, and a lot of people that we interact with definitely do. How many hours does a quant analyst spend on coding per day? So it depends what kind of quant analyst you are. But typically it would be for most part of the day. It would be a mix of R and Python typically. It can be C++ or C or other languages as well, AFL or MT4, all these different platforms which they have different languages. So EPL, I think there are a huge number of languages which are out there. So yeah, but they do code. Some of them would be creating maybe models based on VB script itself, or languages might differ, but coding decent amount. So that's there. Most of the quant interviews check the problem-solving skills of candidate through puzzles, etc. How is EPAT going to prepare me for such interviews? Does QuantInsti has HFTs as placement partners? Okay, so that's right. So even our own firm does that. So evaluation through puzzles and all. We do help you with that. The career cell does help you with acquiring those analytical skills, as well as getting the right resources for preparing for that. So that's there. So EPAT that phase, because EPAT in itself focuses on algorithmic trading, statistics, programming, financial computing, like R, Python, MATLAB, all these languages, and and your what do you say, on the different trading strategy paradigms. So we do not cover on the analytical part in the EPAT, given the kind of course it is, but the career cell does help you in on that side. So yes, that's there. And does QuantInsti has HFTs as placement partners? Yes, we do have a number of them actually. What are the hardware requirements for algorithmic trading? Now again, it depends what kind of trading we are talking about here. Are we talking about LFT? If it is LFT, then you do not need much. What you just need is you need a decent laptop or at least decent desktop on which you can open a browser and code the strategy and run it, or install a broker platform and code your strategy and run it. If we are talking about low frequency trading along with quantitative analysis, in which you are also doing a good amount of data analysis and data chunking, in that case, you will need a decent laptop. There are two options which are available for you. Either you go for a decent machine on your side, would not cost you a lot, maybe $1,000 to $2,000, somewhere in that range, depending on which geography you are in. But other option is that you can also do a lot of analysis on, say, something like on the cloud, right? So that kind of cost is going down very rapidly, and especially with Amazon and Google, all these guys offering their cloud services, huge amount of computational power that they are offering for like on the go with on the go prices. It's making it much more accessible for individual and retail trader to get access to that financial computing power, which was not there probably even few years back, which was not something that they could access without spending huge amount of money on that kind of hardware. So that's there. If you're talking about a medium frequency trading strategy, in that case, you would be using some algorithmic trading platform, which means that you will need some all right kind of server, so which would be few $1,000s. If you're talking about HFT, then it would be the specialized server, which will be going in the range of typically $10,000 to $25,000. So that's the range. What are the approvals you need before going algo? Right. So I think we touched upon it a bit during one of the audience question, but it depends on which geography you're trading into. In case if you are trading in the, say, CME or say SGX or say, for example, in Eurex, then the approval that is required is more of a conformance test, which means that you will be taking the approval for your system, for your trading platform, basically. Once it is approved, then you can code whatever strategies on it and send out orders. So that's fine. In case if you are in the geographies like India or Thailand, in that case, you will need to get your strategies approved. So what you will be doing is that you will be creating the document for each strategy, sending it out to the exchange for approval. If you are a member yourself, then you send it directly. If you're not a member of the exchange, in that case, you send it through a broker, and then there is a process depending on exchange to exchange. But say, for example, in India, you will need to get it signed from the auditor first, participate in the mock trading session, and then you demo it with the exchange, demonstrate it with the exchange. So, and then you get the approval from the exchange. Once you get that, then you start trading. So that's the rule that you have to follow for each strategy. Okay. So, all right. How comprehensive is EPAT program? Would I get profitable strategies from EPAT? Very good question. So I think comprehensive, it's quite comprehensive, yes. EPAT, so the interesting part about EPAT is that we start right from the basics for each of these three pillars of quantitative and algorithmic trading that we have discussed a few times during this session today. But it goes up pretty fast and does touch upon a decent number of advanced topics and the more in-depth topics about on the statistical way of trading, basically. And the interesting part is that most of the EPAT faculty, they're all practitioners, successful practitioners to add, actually. So which means that you learn things more from the practical orientation point of view. Theory at times is required and has to be covered and is covered, but there is a certain level of practical touch which we try to maintain given the practical orientation of each of the instructor. Would I get profitable strategies from EPAT? We definitely do not claim that, and we do not say that we will be giving you these 10-20 strategies and you trade with them and you'll make a lot of money. That's definitely not the idea of the program. So the thing is simple, that if there is a strategy which works for you, it might not work for me. I might have a different infra, I might have a different kind of setup, I might have a different risk tolerance, I might have a different system. There are too many variables which are out there. So it's not about the profitable strategies, but more about how to model those strategies, coming up with those strategy ideas and testing them out, optimizing them, implementing them, all the complete flow, and covers like the idea is that you at the end of the course you should be able to create your own like hundreds of different strategies. That's the idea, and then it's up to you which one is profitable, which one is not, and what you want to implement, what you don't. So it's more about knowledge and the power of knowledge rather than power of strategies as such, but the power to build the strategies. What are the different types of algorithms that can be used for automated trading? A lot of them. So again, you will have to filter them out with low frequency, mid frequency, high frequency. In case of high frequency, the focus would be technically more on the arbitrage and market making, as well as some of the directional strategies which need huge amount of not computing, I would say, but more of faster computing. In medium frequency and low frequency side, you can trade different strategies which actually, from the automation point of view, you can automate any strategy. Even using the factor models, you can even automate your fundamental investing. So analysis as well as the implementation of the algorithms. How much you'll benefit from that, I don't know, because the only thing that you're gaining is maybe on the analysis side you can gain a lot, because you can scan through many annual reports and a lot more fundamental data for a lot of stocks, which you cannot do manually. But apart from that, execution point of view, it does not help that much, because you're looking for multi-baggers, so you're not it does not help you by saving 0.5% or 0.2% in a trade in case of fundamental trading, fundamental investing. But otherwise, yes, you can. But the point is that you can automate all kind of strategies. Yes, you can. But the usual ones, the popular ones, would remain momentum strategies, statistical arbitrage, your option-based, like Greek-based option strategies, including like the likes of dispersion. Then there are sentiment-based trading strategies. Then you have arbitrage strategies. You have so yes, I think there's a whole list on which the popular strategies which are out there, and yeah, we do cover a lot of them in the course as well. How is algo trading helpful for retail traders? I think we covered this question. So from the recipient point of view, if you are doing it manually and someone is out there doing algo, then the benefit to you is tighter bid-ask spread, more liquid market. In case if you are on the other side where you want to do your own trading, in that case, using algorithms, in that case, the way it help you is in by giving you much more scale. So the number of stocks that you can run each strategy on. So instead of monitoring 5 or 10 stocks or 5 or 10 strategies that you can work on manually, you can take that number into hundreds. And also the better emotional power, and also on the analysis side also, you can do a lot of stuff with the algorithms, even if you're not doing the execution using algorithms, but even on the analysis and back testing the strategies, as well as analyzing the data, big data, you can do that. I'm not an engineering graduate or software engineer or programmer. I don't know anything about writing programming language. Then how to make such strategies for trading? I am retired from job. Will it be helpful for my trading to take certain methodology or follow? Are there any standard strategies which I can use for my trading? Right. So I think I'll break it down into two parts. One is that if you don't have programming experience, or but you do have some idea about stats, or if you do have some idea about trading strategies, then the best way to start would be to basically start learning. So I think you can even connect with one of the representatives on QuantInsti side. Also, they can share you a lot of material which will help you get started, which is out there available on our own portals as well as on outside portals. In fact, I think just a few days back, we have just launched a course with NSC Academy as well, in which joint certification free course for option trading basics using Python, right? So on the self-paced learning or self-paced learning contra. So those kind of things, there are a lot of such stuff which is available. You can use that to get started, and then yeah, see if that is something that really interests you. So the good part is that you said that you're retired, which means that you have much more time at your hand, so you can utilize that. But the key part would be to ensure that it is something that actually which actually appeals you. So that's the thing. Are there any standard strategies which I can use it for my trading? I generally do not recommend that. There are no standard strategies which will make you a lot of money. You will always, even for a basic standard strategy or even a very complicated trading strategy, standard strategy, you will need to do some modifications to ensure that you're able to make some money out of it. Otherwise, it's standard. It's standard for a reason, which means that it will not be generating enough returns. So that's there. So good idea is to create your own. So that's important. Okay, what is the role of algo trading in cryptocurrency boom? So this question we just picked because it has cryptocurrency in it. So 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 I think cryptocurrency, there is nothing much. So it's a very different ball game. It's there are a few international EPAT participants based in different locations of the world who have been working on the cryptocurrency related project works, and have even been creating systems to trade cryptocurrencies using automation tools, given that some of the exchanges do give API access, cryptocurrency exchanges. So that's there, but I don't think there is any role of algo trading in the boom as such. It's a very different ball game. It's definitely not because of people using algos to buy cryptocurrencies, just that people are buying cryptocurrency. so in whichever way they can, and yeah, it's I think the kind of volatility is very different. So yeah. So to answer the question, probably I don't think there's any role of algo trading as of now in the cryptocurrency boom. Which API interface do you suggest for interactive brokers? There are a few which are available. In fact, I think interactive brokers have come up with their own API as well as there are some wrappers which has been built, like including the ones of Dr. Hui Liu, who is one of the instructors in EPAT as well. So who has this iBridge PY API. So you can use that, and it's quite straightforward to send out orders in Python using that. So that's there. Will artificial intelligence change the future of algo trading? Right. So this is the last question on the question that we had picked here. So we'll move to the audience questions after this. But artificial intelligence algorithms. Thing is that the how you're going to use artificial intelligence or machine learning, for that matter, it definitely would be giving a lot of power to the individual traders as well as retail traders, in addition to the big institutions, because the thing is that with AI and with ML, it's not just the faster execution that you can get. So for faster execution, you need like high-end infrastructure, so which becomes out of the bounds for a lot of traders. But on the analysis side, as I was saying, that you can do a lot of analysis on the cloud, right? So that computing power has become much cheaper as compared to the physical infrastructure if you had to own that. So it's just a fraction of that with which you can get that that kind of massive power. computing power, and that is what you need for training your algorithms, for making them learn. So like different kind of learnings which are there, and let's say in ML or AI, so which is like so many algorithms, right? So reinforcement, supervised, unsupervised, LTSM, all these LSTM, sorry. So all these algorithms are there, and they are accessible to the retail traders as well. So with that kind of computing power, which is affordable. So that way, I think it will change the way algo trading has been developing, and obviously uh, it's probably, I think, for us at least, it feels that way. That's quite obvious that algo trading would be the thing which will be doing like all the volumes which will be happening in future. Just that we expect that there would be a much more retail participation as compared to the hegemony of few big HFTs or few big institutions, because of all these changes which are happening. And automation is the way the things are progressing across different industries. Like as I said, be it self-driving cars or food delivery through drones, self-driven drones, so all those things. So everything is getting automated, and financial sector cannot be left out of that. So financial markets would not be left out of that. So that's definitely there. So yeah, so more and more automation which will keep on coming, more and more tools which will keep on coming, and as people become more aware and learn all these things, and better tools are available for them for affordable pricing, then they will also be moving more towards automation, and not just the big institutions who will be doing that. So yes, that's there. All right, so let's take up a few questions here from the audience. Okay. There is a question: is there a resource to get balance sheet data for a universe of stocks in the Indian equities apart from Screener and Value Research stock? Screener provides up to 10 years of balance sheet data. Is there a resource for a longer time span? There are a few balance sheet as well as fundamental data, annual reports, all those things that you can access, but they would be, I don't think that would be paid resource. They would be free resources. There are paid resources which are available, so which you can use. So you can connect with the with our team. They can send you some of the links. But yeah, I'm not aware of any free links as such for that. Okay. So okay, let me just browse through a bit. Sorry, too many. Okay. Okay, I have a little experience in C++ programming working in a non-finance firm. Right now, I'm looking to switch in finance firm so that I can learn more about finance and about HFT. But my main aim is to be an algorithmic trader, but without going for higher studies. So I'm looking for a way from quant developer to analyst and then to trader. Is this a good way, or you can suggest me something? We do have had some participants in the past who had actually taken that route, and I think that can be a logical route, definitely. So in which if you already have a strong programming experience, then you try or start your journey as an algo developer. You learn a bit about, obviously you will need to know a bit about algorithmic, about the trading strategies as well as about the stats a bit to understand what you're coding and what you're developing. But once you do that, then yes, you can go ahead as an algo developer and then move towards analyst and trader. So I think that's a good route to go out for, given the background that you have just mentioned over here. What is the okay? What are the best number for CAGR winning ratio you have seen for algo trading? That's an interesting question. So, if you look at the CAGR, the interesting part about algo trading, and especially actually more about high frequency trading, is that it's not about the percentage returns that you can generate. So I have seen strategies which used to like give probably 50,000% returns in a month. But but the thing is that all these strategies, a lot of them are not scalable. So that particular strategy probably used to only run on one single lot. And given that you have to give so little margin, and you can, even if you make any decent amount, that would be obvious. If you make it consistently, that will make huge amount of percentage returns, but it's not scalable. And if I look at it more from the perspective of that, okay, even if it is not scalable, it's so much money that I'm making, but that strategy is making money because you have so much, such a huge, such a strong infrastructure and technology in place, which is, so the expense of that is huge. So if it is only limited to one lot, then you cannot really run your desk with that one lot profits. So that's not possible. So CAGR, looking at the CAGR or winning ratio would not be the right way of looking at it, especially if it is HFT. If it is more about low frequency or medium frequency trading strategies, typically a Sharpe of 1.8 to 2.2, that's a decent Sharpe ratio. So again, we cannot talk about what the returns are, because returns without risk, without defining the risk, especially if it's a directional strategy, that does not mean much. So that's why I gave you a number in kind of Sharpe. If it is, if you're scaling it up to a certain level, then yeah. So that's there. Okay. All right. Another question. Do you provide professional alumni and social networks for startups and operations? We do have a community that we are building right now, which is exclusive for all the EPAT participants and alumni. So there are two communities. One is which is exclusive for them, so with it, which comes with a lot of things within it, but then also open to all community, which is already there, but we are just improving that a bit for a better, more enhanced user experience. So that will be coming probably, hopefully this year itself, which is this month itself. Okay, another question. Let me pick. Okay, so this question is about what is the investment required to start algo trading business? What would be the incremental investment for HFT? For algo trading business, if it's low frequency or medium frequency side, not much. So you can use broker platform or vendor platforms, which are not that expensive. It would probably be few $1,000s a year to few $1,000s a month at the max, depending on what kind of vendors or platforms you're going for. But for HFT, it would be few $100,000, which you would be spending on getting those the required infrastructure and the platform. So that's there. So the cost would be definitely higher. I do not generally recommend people to start with algo trading if they don't have established trading business in place. So if you're not done automation, then starting with HFT might not be a great idea, because automation itself comes with a number of catches, number of nuances within itself. Okay, does EPAT help me develop all the 3 skills required to be an algo trader? Definitely, yes, it does. Okay. Another question. I'm an NRI doing trading in India via PIS platform. How can I do algo trading? If you're an NRI, I think you can do algo. I believe that should not be a challenge. You will have to connect with the right broker. So you connect with the broker who cater to the NRIs. I think most of the brokers are able to do NRIs. If you are not of Indian origin and you want to trade in India, in that case you can come as a FPI category 3. If you are of Indian origin, in that case you have to come as a NRI. So automation, I believe, is allowed. Obviously, there are stocks, restricted stocks, in which you cannot invest into, but that is a very few set of a very few stocks. Okay. All right. Is it possible to get real-time data without using co-location in India? Yes, you can. You can get real-time data. In fact, Exchange also gives you data outside co-location as well. It's not like that you have to be in co-location, but obviously, if you are outside co-location, then you are getting the data a few milliseconds later. So that's a disadvantage in case if you are trading, doing trading with a strategy which is highly latency sensitive. Okay. All right. So I think there was a question then, but then the strategy is no longer confidential, right? I'm assuming this was in context of when we were discussing about approval process. You can so there is the exchanges generally do not focus that much on the strategy, but more on the risk management per se, because the focus is that your strategy does not create havoc for the market or for themselves. So that's the key concern for the exchange, and not as much about what your strategy does and all those things. They would ask you about the strategy at the broad level, but I don't think it goes to a level where your IP is threatened. Okay. Uh, all right. Uh, any good websites for backtesting and writing LFT strategies in Indian NSE, MCX, and BSE markets? Not a lot. We are definitely looking to work on the tools which can offer all those kind of things for different markets. So stay tuned on that. We are working on a lot of things at QuantInsti here. So you should be seeing some action on that. Basically filling the gaps which has been left out to ensure that all our participants as well as the users in general get better exposure and access. So that's there. Okay. Um, what is the quant salary and demand in India? I think it depends on what experience that you have. If you have, if you're just, if you're a fresher, actually, even if you're a fresher, from what background you're coming from, all those things matter. To give a brief idea about if the range is between 2 years to 8 years work ex, if that is the work experience that you have, and you're from a decent background, and then the quant salary typically would be somewhere in the range of 1 million to 5 million rupees on the fixed side. So that's there. It's a broad range, obviously, but yeah, that's because I don't know what it's dependent on so many different factors. So it's difficult to give a narrow range. If we have access to more information, then probably we can guesstimate better. But yeah, that's there. Okay. All right. I think I'll take a couple of more questions. We are out of time. I think we already we're scheduled for 1 hour, but I think we have stretched way beyond that. But I'm happy taking the questions. But I think I'll just take a couple of them, and yeah, we'll definitely take the rest of the questions in later on in one-on-ones with our different team members. So that will be addressed. Okay. How risky is algo trading towards manipulation such as collocation, etc.? Collocation is not manipulation. Collocation is collocation. Collocation is just a facility that is being provided to you. So basically, it's about saying how risky it is if you are traveling by air by spending more as compared to someone who is not able to do air travel but going through a train to a destination, and you are reaching faster. Then is it fair? I think you're paying for it, you're getting it, and then you're doing it. So it's a fair market, right? So you pay for what you get. So that phase is there. But having said that, I think for those for whom collocation matters, it's not for most of actually in most of the exchanges across the globe, it's not that expensive. So the exchanges also has been pretty responsible that ways. So that's there. So even in India, you can get a half rack, which is almost which is 21 units, right? So you can place good number of servers in the half rack, and that comes for around 50,000 rupees a month, right? So which is I'm not saying it's very cheap, but it's not that that stringent if you are trading into strategies which are dependent on collocation, for which every millisecond is for which every millisecond matters, right? So that's there. Okay. All right. Then I think one more question. This is a repeat. Can we develop MACD divergence using Python? Yes, you can. I think almost most of the technical indicator-based strategies you can definitely do that. Okay. Okay. This one analyze already taken. Is there more advanced program than EPAT that you can suggest after completing the EPAT itself? There are actually not very many programs which are offered in the algo trading domain right now. So an EPAT does go take you to a decent level, and from there then there is a lifelong guidance which is there. So in case if you want to go even more advanced or work on something which is much more advanced, then there are obviously they will have you'll have the support which will take care of that with an EPAT. Okay, I think we'll stop here. Thank you so much. I know I had to miss a lot of questions here, but yeah, I've tried to do my best as per the time within the time constraints here, even by stretching them a bit. But yeah, but rest assured, you will be hearing back from our side if we have your contact information with to suggest a time whenever you want to discuss all your questions, and we are definitely happy to give you the response to all your queries that you have or that you might have. I do hope that this session actually helped you in addressing most of the queries that you had. We tried to combine a lot of common queries which we keep on getting from for this AMA session as well as in general as well. So we have tried that. So I do hope that a lot of doubts got cleared over here. But if there is any other doubt, please feel free to reach out to us. We are there to help. We are definitely happy to help you with whatever queries that you might have regarding this domain. All right. So we'll be signing off here. Thank you so much, everyone, for being there and for attending this session. It was definitely a pleasure to actually see so many queries and make an attempt to address your queries to the extent possible. So thanks and have a great day ahead. Thank you so much. Bye bye.